Okay, so I'm going to start that transaction over again. This is the September 7th, perform services on credit. That's the one I was doing, right? Hold on. Yeah. Okay, so perform services on credit. We debited accounts receivable, right, by $6,300. We credited the fees income $6,300, and then we wrote it on here. September 7th, accounts receivable debited $6,300. Fees income is credited. That's the last one I believe we ended up doing. So again, accounts receivable is debited $6,300 because they bought these services on credit, and then we credited our income, fees income. Even though we didn't get the cash, we still get the income from it, $6,300. Okay, so the next one is we paid $640 for monthly telephone bill. We issued a check 1001. So what account gets credited, what account gets debited, what account gets credited? Well, we know that cash is going to be affected. We're paying out $640, so that means we are crediting our cash. So $640 credit, and then what account gets debited? It's over here on expenses, because this is not rent, but it's telephone bill. So they're calling it telephone expense. And that account number is 521. All right, make our T. And then we credited cash, so do we need to debit or credit telephone expenses? Well, we're going to increase our expenses, so we're going to put $640 under telephone expenses. Okay? Going to the journal, skipping a space. September 9th. What account did we debit? Telephone expenses. So that's what I'm going to write here. Telephone expenses. And then I'm going to write the amount. 640 is debited. We always do the debit first, remember. And then cash is decreased. So we're going to go ahead and put cash here. $640. Okay. Did we write a check? Let's see. Blah, 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 9. Yes. So over here, underneath cash, I'm going to write check 1001. And that's all I need to put. Okay. So the next one is September 10th. So I'm going to go to my T accounts. Issued a check 1002 for $675 for equipment repairs. Okay. So we're debiting and crediting. Which account gets debited? Which account gets credited? Well, we know that we're going to pay out money because we just issued a check, right? So $675 gets credited to cash because we're going to decrease it. We're spending that money, $675. But to debit, we're going to go over here to our expenses. Remember I said we have a lot of expenses. We're going to go over here to, and that is equipment repair. Equip repair expense. And that is account number 502. And then make our T. Okay. So I might need a bigger one of these. So our equipment repair, we are increasing our equipment repair expense. We're debiting it, so we need to put 675 here under equipment repair. Okay. So now we go over here to our journal, skip a space, September 10th, and then what account got debited? Equipment repair. Okay, so here I'm going to put $675. Okay, and then because we spent that money, we're going to put cash as the credit. So we're going to credit cash $675. And then under here, 1002. So your journal entry should look like that. Okay, next one, moving on. September 12th, we received a check, $1,090 from credit clients. So this is somebody paying on their account. So this is going to do what? It's going to debit one and credit another. Both of them are going to be assets. We're going to increase our cash because we received $1,090, and it's going to reduce our accounts receivable. So since we're staying in assets, we're going to increase our cash by putting over here 1090, 1090, and then reducing our accounts receivable by crediting it 1090. Okay, now we're going to our journal, put the date, the 12th. First account that gets debited is what account gets debited? Cash. Okay, I heard you all yelling cash, so I was hoping that's what you would yell. So whoops, I'm up on the wrong line. No, you're not supposed to blot out. That was my bad. Sorry. 1090. Okay, so we debited cash because we're getting money. This is money we didn't have earlier today. And then we're reducing our accounts receivable. Sorry. Reducing our accounts receivable, so we're going to credit accounts receivable. So remember, that's kind of like just trading one asset for another. So it didn't increase our owner's equity or our expenses or our liability. It didn't affect that. It just stayed within assets. Okay. So, I forgot to write down here. What did I forget to write? AR, accounts receivable. Okay. And that's it. They don't have an account number or anything. And it didn't even give a check number. If it gave a check number, I would write the check number here, but it didn't. So we're just going to leave it like that. Okay? All right. The next one is the 14th. So, 14th. Okay. So we're going to do September 14th now. September 14th, they issued checks 1003 through 1004 for $12,500. So the way it's saying it, I'm believing that means $12,500 for both of them, meaning we're not going to double that for salaries. Okay, so what two accounts get affected? Well, they're issuing a check, so they're going to have to pay out. So that means our cash gets increased or decreased. Well, if you said decreased, you are correct. We're decreasing our cash for $12,500. So we're going to do it over here on credit, because that's how we decrease our cash. $12,500. then what account gets debited? Well, over here under expenses, we have our salaries expense. So we're going to create another, I should have created a bigger spot here. Salaries expense. And that's account number 514. Okay, so we're going to debit the salary. So we're increasing that expense. 12,500. Okay, so we credited cash and we debited salaries. So now we're going to go over here to our journal. The date is the 14th. We're going to skip a line, 14. We're going to do the debit one first. So we debited the salaries. So over here, I'm going to write salaries expense. Okay, I'm going to debit it, 12,500. 12,500. Making sure you have the right digits, because if you put too many zeros, you're going to end up with 120,500. So just make sure you have the right digits. 12,500. Okay. All right. So what account gets credited? Again, we had to write checks out, so we're going to decrease our cash by the same amount. So we are going to credit it, because that's how we decrease an asset. So 12,500. Decreasing it. Okay, oops, I forgot to write over here. My bad. Cash. Okay, always fill in this part first before you put the number. I just got a little ahead of myself. But before we move on, I want to make sure that we put here, because we have this information, the checks number. Okay, so checks number 1003 through 1004. And I don't need to put any information because it's self-explanatory that it's salary expense. So other than that, I believe we are good. Okay, let's go to the next one, is the 18th. We issued a check 1005 for $800 for cleaning supplies. All right, since we wrote a check, we're going to decrease our cash. So we are going to credit the cash, $800. And again, another expense. Remember I started, we said we had a lot of expenses. Our expenses are cleaning supplies expenses. Yeah. So cleaning supply expenses. Remember this account, and that's account number 501. Remember, the T accounts aren't official. It's just more like a worksheet. So you don't have to, if you go outside the lines or whatever, it doesn't matter. Okay, so we debit or credit our cleaning supplies. Well, we credited our cash. We need to debit the cleaning supplies. So we increase our expenses by debiting it. So 800. I need to get my glasses. That's what my problem is. Hold on one second. Okay. All right. So now let's go over here to the ledger. No, that's not a ledger. I was just testing you. Journal. Journal. There we go. Go to our journal. Put the date. That was the 18th. Which account got debited? That was our cleaning supplies. expense. Okay, and that was 800. Okay, and then what account got credited? We had to credit cash, right? Because we're decreasing our cash, 800. And we had to write a check for that, so check number 1005. So it should look like that. Now, we have room for one more. I'm going to put one more on here. Next transaction. We have the 19th, issued a check 1006 for $950 for office supplies. So, what account gets debited and what account gets credited? Well, what happens to our cash? Again, we're decreasing our cash, $950, so we're going to credit it. And then over here, we need to make another expense account. Do it over here. Office. Supply. Expense. And I'll put the account number right here. Again, this is just a worksheet. So if it's not perfect, it's fine. 503. Okay. So we're going to, this is an expense, right? Not an asset. It's an expense. Make sure we understand that. So we debit expenses to increase them. So we're going to put $950 for office supply expense. All right. Skip a line. Put the date, 19th. Okay, what account got debited? The office supply expense. So office supply expense. All right, we debit it for $950. And then what account got credited? Cash. So cash. $950 for cash. And then we wrote a check for that. So check number 1006. And so that's what that entry should look like. All right. I'm going to get another page for the journal. So what page is this going to be? Page 2. I'm going to write journal up here just so that I know that it's a journal. Brown building cleaning service. Okay, so this is page 1. We have finished page 1. This is page 2. That's important, so when we post to the ledger that we have the correct page. Okay, so we're going to just continue just like we were doing. All right. So the next transaction is the 20th. Okay, this is going to be one of those that we talked about yesterday that has, it's a compound transaction. So we purchased equipment for $10,000 from Razors Equipment Incorporated, invoice 1012. Issued a check for 1007 for $2,000 with a balance due in 30 days. So let's analyze what happened here. We purchased equipment, so we know for a fact that equipment's coming into our facility. So we're going to create an asset for equipment. Okay. Equipment has an account number of 141. I got that from over here in the book. Okay. So the other account that we are going to create is an accounts payable. So we're going to go over here. Accounts payable is under liability. So here, accounts payable. And I'm just going to write what the account, it's for equipment. And then 111. Okay. So, under the equipment, we debit or credit the, let's see, it's $10,000. If we receive the equipment, then we're going to increase our asset equipment. So we are going to debit it $10,000. Okay. Then we wrote a check for $2,000. So we need to do what to our cash? We need to decrease. So we decrease by crediting. So $2,000 over here. Nothing happens here. This stays the same. Okay? And then under accounts payable, what we owe, we're going to increase our accounts payable by crediting it. So how much do we owe on the equipment? If we paid $2,000 cash, how much do we owe on the equipment? We don't put the whole $10,000 because we paid $2,000 of that. So we should be crediting it. If you said $8,000, you said it correct. Okay? Balance is due in 30 days. Okay, so we credited, we debited equipment for $10,000. We credited cash for $2,000, and then we credited liability, accounts payable, equipment for $8,000. All right, so now let's take it to the journal. The date, I'm going to put 2020 here, and I'm going to go ahead and write September because it's the beginning pages, beginning page, and September 20. Okay, what account got debited? The account that got debited was the equipment. So that's the account that I put first, equipment. Okay, and then I'm going to write 10,000, 1, 2, and 3. $10,000. All right, then what accounts got credited? We actually had two accounts that were credited. That's what makes it a compound entry. We credited cash and we credited equipment. Now, when you're this is important. When you're listing on the journal a compound entry and there's more than one debit or more than one credit, you want to list them in the correct order. Always list them in the order that they are listed here. Always assets first. And if it's an asset, there's more than one asset, cash always goes first. So list them then by account number. So, and then next we would do liabilities, then owner's equity, capital and drawing, revenue, and then expenses, and then by account number. So which one of these should I list first that we credited? Let's look at the ones that we credited. We credited cash, and we also credited liability. So which one of those should I list first? If you said cash, you are correct. Cash should be listed first because, again, it's first on the list here under assets, and it's an asset always comes before a liability. So cash, I'm going to indent cash, And then how much did we pay in cash? Or it was us. We paid $2,000. Whoops, what did I do wrong? What did I do wrong? I put it under debit. Bad. Okay, 2,000 right here. Okay, I did that just to see if you guys were paying attention. Okay, what other account now do I need to put? What account did we credit? Accounts payable equipment. So under here, I'm going to put accounts payable equipment. Okay, how much? $8,000. Okay, so this is important. On a compound entry, well, your debits and credits need to equal. So this is $10,000 for the equipment. Cash, $2,000 of it was paid with cash. $8,000 of it was paid or is on accounts payable. So these two should equal this one. Okay? So regardless of however many credits or debits, they should equal each other. Okay? If it doesn't, then something went wrong. Go back to the transaction, figure out what you did wrong. But in this case, equipment's $10,000, cash is $2,000, and then accounts payable is $8,000. Okay, so before we move on this one, they paid with a check. So we want to write check number 1007. And also, since it's accounts payable, we want to say, again, they give it a little information here, balance due 30 days. Okay? Just to give extra information. Nothing goes on those lines. All right, now we're ready for the next one. On the 22nd, we're going to skip a line. Actually, we're going to go to our T accounts. Sorry. T accounts. Perform services for $4,800 in cash. All right. Does our cash get increased or decreased? It gets increased, so therefore we're going to debit it. So 4,000. You don't have to do down here. You can actually go up here. You don't have to have these spaces in between. So I can go right up here, 4,800. Remember, this is a worksheet. Not going to turn this in. Nobody's going to see this after you made sure your balance. Okay? 4,800 under cash. What other account gets affected? This is services performed, so fees income. We're going to increase our fees income by crediting it. So 4,800. All right. Go to the journal. The date, 22nd. What account got debited? Over here, cash. Cash got debited. So we're going to write cash. How much? 4,800. Okay. And what account got credited? Our fees, income. That's credited, 4,800. Okay. All right. It didn't give us any check number or anything, so that's all we got. I could say services performed. Okay. All right, next one. The 24th. Issued a check 1008 for $950 for monthly electric bill. Oh my goodness. Are we going to have to do another expense? No, we're going to put all utilities. Actually, telephone. Yeah, we're going to make another account. Oh my goodness. Let's do it down here. Utilities. Next time I'll make a bigger one. All right, debiting or crediting, we are going to